Hello guys, how are you guys doing? I hope you are doing great. Here is another video for you today. Let me show you the topic. The topic for today's lesson is going to be institutional order flow. Okay, this is actually going to be like in episodes because I believe if you can see on my screen here, I said IUF is king of the game, right? So this is according to me or my experience, I can tell you with proofs that institutional order flow is a king of Forex, okay? Whether technical analysis or fundamentals, we as smart money traders, we believe that fundamentals, they come to the market to fuel in or to put more volatility into the marketplace. And because of that, the market has to follow its institutional order flow, right? The institutional order flow must be followed, right? So the news or whatever kind of fundamentals, it comes in the market just to fuel price, all right, just to give more volatility so price can reach out for its liquidity pretty quickly. Okay, so I'm just going to be giving you some key let's just say basic understanding of what I mean by institutional order flow here. It's not a new topic. Uh, Many people think that market structure is a key and all those things. Like, let me just prove you wrong. Here we have an uptrend, and then the market is creating a higher high, higher low, higher high, higher low, and then a higher high. That's relative equal highs. Now, when people see this, they start to sell, like a market trend have changed, right? But it hasn't changed yet. Price is still making a higher high. So how come we had a break of structure here and then price still continue buying? So those are the things that when you focus only on market structure, you tend to miss out a lot. You tend to have a lot of losing trades. Okay, but with the concept of institutional order flow here, it will help you to be able to sanitize all these random traps and movements from these institutions. Okay, so I don't intend to make this long. Like I said, I'm going to put it in episodes. This will be the first episode, and in this episode I'm just going to open your mind to understand the institutional order flow concept. Okay, and then with the other episodes now, I'm going to be showing you how to identify it, how to follow it closely, all right, so that you don't make any mistakes. Okay, so now what is institutional order flow? I just wrote something. Let me just type it here so that you can see, just a small writing so that you will have a guideline on it. Okay, okay, okay. And then this. All right. So this is what we have here. Let me make it a bit big so that we can all read together. Okay, so what is institutional trading, institutional order flow? So the order flow trading concept is simply seeks to indicate the directional bias of the market, where big participants, we know them like the big banks, central banks, will manipulate price to go, then resting liquidity pools with the targeted on previous highs and lows in form of stop losses or pending orders. Now, if price collects liquidity, now if the price collects liquidity on previous lows, this means we might see the market structure being bearish, all right, when it is on a previous low, all right? So retail traders use order flow for directional bias and all those stuff. So practically, this means that wherever you have a swing high, an old high or low, that's where liquidity is lying. Remember that the market books from liquidity to liquidity, internal range liquidity to external range liquidity. That's how the market books. There is no other theory apart from this, okay? The market books from internal range liquidity to external range liquidity. I'm somebody that love teaching practically, like in a practical sense is there is no business that can function if the liquidity here we're talking about is money, right? So there's no business that can function if there is no money, if there's no exchange of money or something valuable, right? So here the market functions, or the market delivers based on liquidity, and it is from internal range liquidity to external range liquidity. Okay, so in our next episodes, we're going to be discussing on those internal range liquidity to external range liquidity. Like, and you have an institutional order flow that is bullish, there are things that you look out for to know if the institutional order flow is bullish or it is bearish. Like just pretty quickly, for example, here we had this swing high. We had this swing high and then this swing low, right? So, but for now, let's just consider we had an uptrend. Now, when price creates a high like this, we know this is now our new trading range, right? So for us to make profits in this particular asset, we will want to buy it at a cheaper price. We want to buy it at a cheaper price, which means that we'll likely buy it below the 50%, right? Below the 50% of the range, okay? So now when it is at this level, price did not come right down to the 50%, okay? Price did not come right down to the 50%. So which means that if we're buying at this level, we are buying too expensive, and that's not the way to go, right? If you're a business person, you will know very well that if you go to the market to buy stocks or whatsoever, you cannot buy at a higher price, because when you come, the customers for you to buy, they will need to buy at a lower price, and you will not be able to sell and make profit. So at this point, this is just a simple concept in trading. You buy at a low price, you buy at a high, you sell at a higher price. But how do you determine a lower price? Like I said, the market books from external range liquidity to internal range liquidity. So when the market grabs the external range liquidity that was sitting here in the form of buy stops, what next? That was external range liquidity. So the market has to come back down for internal range liquidity. And internal range liquidity, in this case here, we have fair value gaps. Right here is a BC. You can call it a fair value gap or imbalance and all those things. So that is, this is the imbalance CB and BC. That's going to be an episode on its own, because it has a lot of things to look into, some secrets on that. Right? So I'm just bringing your mind to understand the meaning of this main topic that we are going to be discussing about. So like I said, the market grabbed the buy stops here, and then it was supposed to come back for the internal range liquidity, right? And then now our internal range liquidity, we are going to be entering at a discount price. Any internal range liquidity line above the 50%, you can take it as inducement, right? The market is just inducing people to run in so early, and then they get stopped out. They provide more liquidity for the patient traders, right? So now, like I said here, we had some break of structure here, but it was not the case, right? It didn't change the fact that the market was bullish. Now, why didn't it change the fact that it was bullish? If you leave from here and then you go to, like, let's say the 1 year time frame, you will discover that at this point there was barely nothing here, like some old lows, right? It was just one structure, impulsive move, pullback, and then another impulsive move. So now, how do we determine our institutional order flow, right? That's the question that I guess you have been asking yourself already. How do we determine the institutional order flow? All right, that's the first question that I ask myself anytime or any day that I want to trade. All right, where is the institutional order flow? Where is the market going to? And remember, I said the market books from liquidity to liquidity, from liquidity to liquidity, external to internal, internal to external, vice versa. All right, that's how the market books. All right, now remember, if I said when I said the news, actually they have its place, right? I'm not completely turning down that fact, but it has its place. You don't have to over exaggerate it. Okay, and remember, like I said, it is always coming just to fuel price. This charts that you're seeing, how it tells us all the story. Okay, the story is written within these candles, and if you are able to study it, you are able to interpret it, the news will always be in your favor, right? Normally you are not going to be 100% right, which means that there are some times that the market will have buy side liquidity and will have sell side liquidity, and you'll be more focused on the buy side, and then the news will come and then decide to go for the sell side. So which means it's a clear fact that you're not going to be 100% right all the time. So that's the reason why sometimes the news will come and you think that, okay, the news should respect this other block, and because the other block was this and that, and then the news fails. All right, and the news go to the different direction or break the other block, and you'll be like, oh, news and this. So all those things, they are in context. All right, all those things, they're in context. Now when you know the theory of institutional order flow, you will know that there are some other blocks that are not going to work. Okay, why are these other blocks not going to work? Because they are against the institutional order flow. There are fake order blocks that were printed. All right, this order block theory is going to be another episode on its own under this institutional order flow. All right, but our main focus today is just to brighten up, or to make you understand the theory of institutional order flow. Okay, so how do we determine your institutional order flow? First thing, whether you're a scalper, position trader, or swing trader or whatsoever type of trader, you need to know how to use your time frames, right? You need to know how to use your time frames, which is very, very important, very important. Now, like this, I have the 6 months chart on my screen of fiber, that's Euro USD. Now, why did I pull out this chart? Now, for you to be able to determine your institutional order flow, you need to first of all start from a higher time frame, right? I look at the monthly. When I look at the monthly, I know that the monthly is going to be greater, right? The monthly is greater than the weekly. The weekly is greater than the daily time frame, and then the daily is greater than 4 hour, and then just like that, 4 hour is greater than 1 hour time frame, just like that, right down to the seconds time frame, which means that if monthly is greater than weekly, and then 3 months is greater than this 1 month, 6 months is greater than 3 months. So it's always very important for you to look at the higher time frames. Now, the summary of how to determine the higher time frame is you need to start from a higher time frame. Okay, you need to you determine your institutional order flow from a higher time frame. Now, when I say that 15 minutes is greater than the 1 minute, which means that if you're a 1 minute trader, you have to be looking at the 15-minute chart, right? You have to look at the higher time frame, in this case 5 minutes and the 15-minute 1 hour, to know what that time frame is doing, all right, before you can be able to engage in that time frame, right? So your institutional order flow is determined on a higher time frame. Now, for a scalper, you will not actually need to look at a higher time frame up to like 6 months time frame like I did here, but it's still very, very important that you check, right? It's still very, very important because you need to know why price is doing what it's doing at any point in time, right? For example, here price came down to the market dropped down. Let me delete this. Let me clear my drawings. All right. Now the market dropped down to this bullish order block here, right? This is a bullish order block from the 6 months. And then we also had a fair value gap from here. Now, immediately price touched this level, and start rejecting. From the daily downward or from the weekly, we know that at that point, right? Normally, if this is not even to hold, price will have to reverse, right? We had a CB that was formed here. So price had to feel this. Now, within all these 6 months movement, we are going to be bullish, all right? We are going to be bullish. All this pullback from here back to this CB, it's going to be a bullish IOF from short-term traders, right? Which means that if you're going down to smaller time frames, we are going to be having a bullish uptrend. We are going to be having a bullish IOF. And in this case now, if you are having a bullish IOF here, then any bearish order block or bearish fair value gap is not going to hold. Why? Because it's against the institutional order flow. All right, it's against the institutional order flow. I'm just teaching you how to determine your IOF. Remember, I say this from a higher time frame perspective, right? Because let's just go down to let's say weekly time frame. Let's just say weekly time frame. Or I should draw. Yeah, let me just put something here. That's our bullish order block from the 6 months, right? Let me just say 6 months OB. All right, that's our bullish order block from the 6 months time frame. So we are going to be scaling down now to see how price reacted when it came down to this order block. Now, at this point, people who are selling, they'll be expecting to take their profits right down at this low. But what's happened? Price started reversing here. How will you know if you were buried on a smaller time frame? I guess you understand now. How would you know that this pullback here, this is a monthly chart, which means that about 4 months we were bullish, right? So how would you know that price will just reverse at this point, right? You need to look at a higher time frame, and price hit a 6 months order block, and that's a powerful one. All right, and we had a fair value gap there too as well. So we were looking at the daily time frame. Immediately price hit that OB, we saw a flagship reversal, right? We saw a flagship reversal, which is another very, very bullish or a very, very bullish signal confirmation. This candle, we call it a flagship reversal. We saw this, and then immediately you see this, you know that the narrative is changing, right? The narrative is changing now, which means that any point at all the other blocks that you were expecting here to hold, they are not going to hold again for long. Why? Because IOF from a higher time frame is, or even we are having a retracement from a higher time frame, which means that for the short term time, our daily or our lower time frames are going to be bullish. Okay, and then you shouldn't be expecting fair value gaps or other blocks from higher time frames to keep on holding, right? If you are somebody that's trading a fair value gap, okay, like some people now will be like, all right, let's sell from this fair value gap and so on. Price will come and then just take to it. This is because price is doing a different thing on a higher time frame and you are lost on a lower time frame. Okay, so you always have to check your higher time frames to see what price is doing. Now, when you determine from a higher time frame what price is doing now, the next thing, I mean, that's which means that you have gotten your IOF direction, right? You have understood what the institutions are planning to do now. The next thing for you to confirm that is to have you to look into your market structure now, right? So market structure here is like the second in command. Okay, market structure here is like the second in command. You don't look at market structure when you haven't checked your IOF, right? Now, at this point here, we had a break of structure. Now, this is a clear signal that we are being short-term bullish just because price hit a very important level on a higher time frame. So which means that we're not just going to be selling because we are thinking that price is going to continue going down. This is already a shift in structure, a failure swing here, right? So you now start to look at bullish order blocks. Those are the levels that are going to hold now. Any bearish order block now is not going to hold. If it holds, it's just for a retracement and for price to continue moving up. So you start looking at bullish order blocks now and bullish fair value gaps to be respected and so on and so forth till price gets back to a good level on a higher time frame. That's how the market books, right? You look at your higher time frame. You don't determine your institutional order flow from a smaller time frame. Remember, I said the market books from liquidity to liquidity, from liquidity to liquidity. And for the fact that the market all this while was selling, so price will be looking for sell side liquidity, sell stop, sell stop, sell stop, till the institutional order flow here, which was bearish, changes direction. That's until then price will continue to be dropping. Now, this here was to be like a break of structure, but why would this not be a break of structure? Remember, I said you always have to look at your higher time frame. Okay, if you don't look at your higher time frame, you are going to get lost. You are going to get lost. You are going to get lost, and you will not know why you are trading an order block and it's just failing, trading a fair value gap and it's just failing, and so on and so forth. Let's just look why we had this was here. This is a lower high, this is a lower low, right? And this is another lower low. So in structure wise, we'll be expecting price to come back up to this bearish order block here and we sell from there, right? But what happened? We had a fair value gap up here. We had another fair value gap up here, but this is not my interest for now. I want us to go to a bit higher time frame to see why this structure was violated. Okay, to see why this structure was violated. Okay, so let's just go to the weekly, I think. Okay, now when you look at the weekly time frame, you discover that there was barely nothing here like a structure high, right? There was barely nothing here as a high, like it was clear on the daily time frame. So but on the weekly, we have just this CB here in this fair value gap. So this fair value gap is from the weekly, and when you look at the daily time frame already printed a lower high here, right? But we're expecting price to rebalance structure from the weekly time frame. So if you are just caught up on the daily chart here, we want to sell here, right? But it's going to fail because price is respecting more of the higher time frames, right? You need to know what the higher time frame is doing. Now, at this point, you notice that price came back up to the fair value gap from the weekly time frame and it started selling, right? Now, at this level, let's go back again to the daily time frame. There is something very important here now. Here again, you will think that, all right, we had a break of structure here, right? This is a break of structure to be bullish. So you're not thinking that, okay, price is bullish. You start to spot an order block like this, say, all right, you're going to buy from here. The trend has changed direction and then you buy from here, you put your stop loss, let's say down here or up just below the other block, and you start targeting higher highs. I mean, these old lower highs that were formed, right? But what is going to happen? You need to look at a higher time frame. Why? At this point, even though you are seeing this break of structure, the IOF is still the same. It has not changed, right? The IOF is still bearish from a higher time frame perspective. So always make sure that whatever time frame that you are trading, you look at the IOF from a higher time frame. Okay, you see how price just broke through that other block. It did not even waste time. So those are the things that when you neglect the use of your higher time frame, or you neglect the institutional order flow, market structure is just going to mess you up. Okay, you always have to look at your higher time frame. That's how to determine your institutional order flow. Now, let me say this again. To determine your institutional order flow, you have to look at higher time frames, right? Now, what are you looking at on higher time frames? Remember, I said the market books on liquidity, internal to external. So when you are looking at the higher time frame, you're looking like, okay, this is an old low, this is an old high that price is coming for, this is a fair value gap that price is retracing to, this is this and this is that. So when you put all those liquidity concepts together, or all those liquidity pools that are going to draw price, then you will know that, okay, this is it. This is what is happening on a higher time frame. If you go now to the daily time frame, you will know that, okay, this is where price is seeking for. This is what price is seeking for. This is where the liquidity is standing, and you know that, okay, this is going to be an inducement, this and that, and price is going to head for this level. So you will be able to frame your trading models or setups in line with what the higher time frame is doing. That's for you to be safe. All right. So guys, I didn't want to make this video really long, because like I said, it's going to be on episodes. I want to make it as short as possible. And for you that you are still watching, yeah, that's great. You are showing some commitment, and that's where the reward comes from, right? Just keep on practicing, practice, and it's going to unveil your eyes, and you'll be able to spot these market movements as easy as possible. Let's just look at what price is currently doing now. This is fiber. So all this while price was seeking now for buy side liquidity, buy side, all these highs where liquidity was lying, right? So price was now coming for them. Now again, there is just one small thing here again. Now price came back down to this bullish order block here, right? This is a bullish order block from the daily time frame, OBD1, right? Let's just put it like that. And then let's just go to the 4-hour and see magic. All right, guys, when you come down to the 4-hour here, this is the 4-hour time frame. So price came down to this bearish order block. Now, another thing again, if you were lost on your smaller time frame, won't you take this as an order block? You see how price just broke through it. This two again is going to be another bearish order block for you. But what happened? Price smashed you out of the market, right? You all of them had break of structure and break of structure. But what was actually happening? Right? That's the question you're supposed to ask. What is actually happening in the market? Price is seeking for internal range liquidity, and it's respecting a daily bullish order block. So all these lower time frames is just going to be noise if you don't know what the higher time frame is doing. Even if you were selling, you will know that price is hitting a key level on a higher time frame, and that should make you to be cautious of what you are doing. All right. Remember, I said if the institutional order flow is bearish and you are buying, know that it's for short time, right? It's for short term. Now, just a quick look at this one here. Price here was already selling, and then this is another nice bullish order block here, right? Did it hold? It didn't hold. Why? Because price already took this buy side liquidity here, and then for the meantime, price was bearish, seeking for sell side liquidity. And where is this even happening? This is happening on a 3 months fair value gap, right? So all this selling is coming from a high time frame, and it has already taken the buy stops. And what I said, price books from liquidity to liquidity. So which means that this low is going to be next in view. Now, what is if this order block going to hold? That's the question you should ask yourself. And now, if we're on the 15 minutes, you will know that you have to go back up to a higher time frame to actually see what might be happening. And when you go to a higher time frame, you will discover that there is a nice fair value gap here coupled with this order block, which means that it's likely for price to reverse from this key level. And now when you go back to the 15-minute time frame, you will discover that this mitigation block here is likely just going to be like an inducement. Price might pretend like it wants to sell, and further up, continue pushing up, right? So guys, that is it for today. That is it for today. In our next episode under this institutional order flow, I'm going to be teaching you how to determine your IOF using our BC or using the BC or the CB. I'm going to explain that concept to you very well. And the third episode, we are going to be talking about other blocks, right? And many more, right? So guys, make sure you like the video, subscribe, and share to your friends. Let's help other people gain financial freedom, right? I'm giving you this free, so it won't be of any good for you not to share it to your other friends, right? Thank you guys for watching. I love you guys, and have a good trading week. Or I'll see you again with another episode.